Hey everyone, welcome back. I think you all know I'm big on HODLing Bitcoin. So much so, my first ever video was an ode to the hodlers to appreciate all that's happened since the last halving. I'll link it above. But another reason I made that video was to memorialize how hard it is to HODL through all the upturns and downturns in the Bitcoin market. Yes, we're near all-time highs again, but lately I've felt like we're reaching a point where people are getting a little bit antsy, impatient, maybe a little bored. I've felt that before in previous cycles too, and it's a familiar feeling for sure. But in my view, Bitcoin still has a long, long way to go from here. So today, I wanted to explore the psychology of hodling Bitcoin, and in particular, why it's so hard to hodl through the ups and downs of the fiat market. Please note I never give financial or legal advice on this channel, so if that's what you need, please consult a professional for yourself. So having said that, let's get into it. At the core, hodling Bitcoin is about having a low time preference mentality with respect to your money and assets. Previously, I made a video about how Bitcoin can transform your mind so you can stop wasting your life and gain the freedom you desire. I'll link it here. But having a low time preference mentality goes hand in hand with having a strong conviction in Bitcoin's potential to appreciate over time, and then sticking to the plan. Because when you really do your research, it's such a strong case to hodl Bitcoin due to its various hard money properties such as scarcity, portability, verifiability, etc. But sometimes human psychology can make that harder than it seems. Volatility can evoke a wide range of emotions, from euphoria during bull runs to despair during crashes. And that's the key point. These emotional highs and lows can severely impact your objective decision-making process. Yes, we want to believe we're stone cold, diamond-handed hodlers, unaffected by emotions. But unless you're already independently wealthy or you're part of that tiny percentage of people who are completely immune to risk aversion, you're going to feel those emotions. Let's dive into some of the most common emotional responses and cognitive biases that can influence our behavior. The most obvious emotions familiar to all investors and traders are fear and greed. When Bitcoin's price is skyrocketing, greed can take over, making you want to buy more even at inflated prices, otherwise known as fear of missing out, or FOMO for short. Or fear can take over during a price pump, make you sell Bitcoin to, quote, take profits, when in fact an asset like Bitcoin can easily appreciate by orders of magnitude more than other assets. It can really hurt to sell at 100% gain, only to see it thereafter make another 400% gain. On the flip side, when prices plummet, fear can lead to panic selling, driving you to offload your holdings at a loss. This fear and greed cycle can prevent investors from sticking to a hodling strategy. In fact, veteran hodlers actually use these emotions to their advantage by recognizing when the market is being fearful and capitalizing on it. Overall, the key is to recognize and acknowledge they exist and to understand their impact on your decisions. Objective, non-emotional decision-making is the key to overcoming fear and greed. But there are also several cognitive biases that can make hodling challenging. A few of them are: 1. Recency bias, which is the tendency to give more weight to recent events when evaluating investment decisions. For example, if Bitcoin has been on a downward trend recently, you might assume it will continue to drop, leading to panic selling. Another bias is loss aversion, which is the idea that people feel the pain of losses more acutely than the pleasure of gains. For example, the fear of losing money can cause you to sell your Bitcoin during a downturn, even if you believe in its long-term potential. Another bias is herd mentality, which is the tendency to follow the actions of a larger group, often disregarding your own analysis. Example, when everyone is selling, you might feel pressured to do the same, even if your own research suggests otherwise. Again, if you can acknowledge and understand that these cognitive biases exist and have an effect on your decision-making process, you'll have a better chance of removing them from your decision-making. An external factor that can change your views and affect you emotionally if you let it is the extensive reach of media and social media. Media and social media channels are powerful. Nowadays, it's rare to find those that are objective without an agenda. This is because their ultimate goals are influence and viewership, usually attained by sensationalism, appealing to emotions. During periods of high volatility, these channels can spread FUD, which is fear, uncertainty, and doubt. FUD can spread quickly through news articles, social media, and word of mouth, causing hodlers to second-guess their decisions and panic sell. On the other hand, positive coverage can fuel excessive optimism and FOMO buying sprees. So in this day and age, it's very important to carefully evaluate the information you consume and the sources of such information. You should keep in mind that market fluctuations are normal, and long-term trends often tell a different story than short-term headlines. Then you can make informed decisions based on your own independent research and analysis, not on your emotional reactions to the latest sensational story. So how can you strengthen your resolve and stick to a hodling strategy despite the emotional and psychological challenges? Here are some tips that help me. First, define your goals and time horizon. Knowing why you're hodling and what you hope to achieve can help you stay focused during volatility. Second, stay informed. Educate yourself about Bitcoin and the broader markets as well. Understanding the financial, technological, and economic fundamentals, as well as the Bitcoin market landscape, can boost your conviction, helping you to hodl on. Third, develop a support system. Join Bitcoin communities and connect with like-minded investors. Sharing experiences and insights can provide emotional support and help you stay committed to your strategy. Fourth, automate your investments. Consider using dollar cost averaging to automate your Bitcoin purchases, and by investing a fixed amount regularly, you can reduce the impact of market volatility and avoid emotional decision making. And lastly, make sure you don't get distracted by low market cap garbage. Most crap coins are designed and marketed by highly centralized marketing personnel who will try and convince you they're the next Bitcoin, but they're most definitely not. So looking ahead, what does the future hold for Bitcoin hodling? Nobody knows for sure, but as more institutions and mainstream investors enter the space, the potential for Bitcoin to grow in value increases. It's essential to remain aware of the risks and your own personal risk tolerance. Understanding emotions and biases that influence your decisions can help you navigate the ups and downs of the Bitcoin market. So stay strong, stay informed, and happy hodling. See you on the other side. Peace.